Shane, and thank you for arranging all of this. Welcome everybody. Thank you for your time in listening to me. We plan to have this session for around an hour. I'm not too sure we'll fill the whole hour. I'd like also to introduce to you to Melanie LaRouche, who's sitting next to me. So she's listening to everything we say. She's the Managing Director of Great Soft Financial Services, who is the authorized financial services provider. And but you'll hear from a little bit later on in the presentation. Now, as Shane said, you are more than welcome to ask questions as we go. I'll field them as well as I can. So hopefully I can add some value to your learning today. Right. So I haven't done this presentation yet on an electronic platform such as this. So I'm hoping that it will add value to your experience. So when people see the SARS logo, they often have some different emotional reactions to what to SARS. Depends on if SARS has given you a refund, or depends if you had a fight with SARS. And that's effectively what our business is dealing with. And so during the course of today, I'm really going to spend some time on the environment in which SARS currently operates, some trends, some things that we've seen happening in the market, and some statistics, and then maybe bring to you one or two case studies that explains to you, and especially for you as the accounting professionals, you probably will see some of this in your own business. And it will be my intention here is to have a meeting of the minds between what you guys in the accounting business or in the accounting practices are experiencing, what we're experiencing, and that's the objective, to bring those two together. And then at the end of it, I'm going to tell you a little bit about the product, just so that you have some of the information about what we actually do. All right, so just as a start off, tax risk insurance is insurance protection against SARS tax audits and disputes, and it's available for businesses and individuals. So what typically happens is when SARS writes you a letter as a business owner and says you are hereby selected for a VAT audit or for an income tax audit, or alternatively, SARS writes you a letter and say you owe them extra taxes. And then also the SARS annual performance plan for 2018-2019. Now, the annual performance plan is SARS's business plan for next year, effectively. So they tell you where they're going to be focusing their attentions and so on, which for accountants and people in my business are fantastic, because now we know what to expect and how we prepare our clients and how we prepare our accounting practices and how we prepare for this business internally to deal with these things. We also then, of course, get a lot of information of how SARS behaves from claims that we pay, because that's effectively what an insurance company does, is it processes claims, it tries to help its clients out. And in doing that, you start understanding a lot about the internal workings, because it's reasonable to understand that because it's an insurance product, we only get involved really in the massively complicated items, not really the day-to-day submission of tax returns, etc., etc. And once you specialize in that, you do tend to pick up what the trends are, where SARS is going wrong and what they are doing right. So that's a great source of information for us. Then also we keep an eye on the press releases. SARS, especially in the last couple of years, they've been very good at publishing what they're doing. Just recently we've seen that they published, the Ombudsman came out against SARS about how they withheld tax refunds. And then SARS is very good at responding to all of those in the media and to keep the public up to date with what's on the go. They also provide us information on tax collections, how far they are from the targets, what's standing in their way, what they're focusing on. So that's a really great source of information, and I'm sure you guys in the accounting world also have a look at that. And then some general market information that we get within our business. So we can use all of this information to make sure that we help the taxpayer. So you as the business owner who might be here this morning, these are the type of things that we use in order to help the accounting fraternity, to help you in your business, especially when you get into significant difficulties with the South African Revenue Service. Now, one must understand, and it's fairly public knowledge, that SARS is one of the best collection agencies in the world. The technologies are leading edge. And that is at the same time as it's a good thing, it's also very problematic to taxpayers, because once you run into the bureaucracy, it's very difficult to navigate around that situation. And that's often where accounting practices get frustrated because they're not getting the results that they want to. SARS is ignoring the appeals, SARS is ignoring the objections, and at the end of the day, the business owner, who's the client of the accounting practices, but Mr. Accountant, help me out here. It's your job. Please sort these things out. And it is very frustrating, and we understand that all too well because we're in that same boat, of course. Right, so here is the message from the minister, and this comes out of the SARS annual financial report, as I mentioned earlier. So this was when Minister Nene still had his job as the finance minister. Of course, it's now our beloved Mr. Tito Mboweni that currently holds that position. So in his annual report, he had this to say about this thing. The South African Revenue Service, as the collector of more than 90% of the government's revenue, remains a key enabler of the National Development Plan. Moreover, revenue collection performance is an important dimension in managing perception of rating agencies. So why that is important is that, you know, SARS has this mandate of collecting revenue. In order for the state to fulfill on their promise to the population, is they need this revenue to be collected. If there's a shortfall in the collection, clearly that puts an extraordinary amount of pressure on the state, and by default then an extraordinary amount of pressure on the South African Revenue Service for under collecting on the taxes. So he goes on to say that revenue collection fell short of the printed estimate in 2017-2018 financial year by almost 50 billion rand, and consequently led to the difficult decision to raise the VAT rate to 15%, which was announced during the budget speech. So this is a highlight from Minister Nene at that time. So during the last tax year, SARS was short of 50 billion rand of taxes. This was well reported in the media, so this is public knowledge. So there's only really two ways that the South African Revenue Service can fill that gap. The first is to raise additional taxes, and as the minister said, they attempt to do that by raising the VAT rate by 15%. We know they institute the sugar tax and various other taxes. So they intend to, one of the two mechanisms to raise additional taxes is to raise new taxes. But that has a limited lifespan, because there is this flexibility that as soon as they go over a threshold of collecting taxes from the population, it becomes counterproductive, because then people spend less. And that in fact happened with the VAT increase to 15%. It achieved about half the target of what government was supposed to collect, because simply put, people didn't have money to spend. And when there's no money to spend, there's less tax revenue coming into the coffers of the South African Revenue Service. The other mechanism, of course, available to SARS for increasing tax revenues is just to collect more from the existing base. And this is currently where we find ourselves in the environment. Is this massive amount of pressure that SARS is under to collect taxes, very limited scope for introducing new taxes, and therefore have to collect more from the current tax base. And as a result, we are seeing many more tax audits coming on, and I'll discuss more of that, you know, as we go through this presentation. Right. Right, just some numbers. This comes out of the SARS annual report. So as you can see here from the circle in the middle, there's around 26 million registered taxpayers in South Africa, of which the overwhelming majority, of course, is individual taxpayers. So about 21 million of those, and then the combination of trust companies and VAT makes up the majority of the other taxpayers. So by far, we see that 21 million of the 26 million is individual taxpayers, and around 500,000 are then company taxpayers in various type of forms. Probably about 1 million if you then add in pay-as-you-earn taxes into that. But more significantly, so here's the percentages, just to break that down for you a little bit more. So 80% of the taxpayers are individuals, and we're not talking the amount of money being contributed to the fiscus, but rather the number of taxpayers. So 80% of taxpayers are individuals, 1% is income from trust, 12% from income tax for companies, further 3% from VAT, 2% from pay-as-you-earn, and 2% from customs. And here is a graph of the amount of taxes that's actually being collected from the taxpayers. So as you can see here, although 80% of the tax base is made up of individuals, almost 40% of the amount of taxes being collected is from personal taxes. While if you add the VAT and the companies plus STC to that, those two numbers together, it makes up 44% of the tax base are collected from companies through VAT and STCs, and you can probably throw in 6% fuel levies, 7% customs also. So a significant amount of the taxes are being collected from companies, but a significant amount of people, individuals, contribute to the tax base. Right, here's what they collected during the last tax year. 1.6 billion rands worth of taxes was collected. What is significant in these things, of course, is how does that perform? What's that for performance? So we've seen tax revenue growth of 6.3% against a gross domestic product. So the economy growth grew by 1.3%, while the revenue collected grew by 6.3%. And this in itself is a significant number, because you can see what's happening is that although the economy is sluggish and it's growing at a really, really slow rate, and we expect this year to be below the 1% growth rate, tax revenue has increased by 6.3%. So there's this disjointment between the growth in taxes and the growth in the economy, which then, if you think logically about it, it puts more taxpayers under pressure. So the cost to revenue collection, this is, with other words, what it costs SARS to collect these taxes, has grown by 0.89%. So SARS's internal resources has not grown by a lot. They are very good at managing the internal resources, not expanding, and it's the lowest, as you can see there, in the last 7 years. So that's a significant number. And so the growth from 2016-2017, the South African Revenue Service collected 72 billion rand more in taxes than it did in the previous financial year. Shane, I know you're around. What we have here in this graph is the tax revenue collection growth since 2012-2013, and you can see the upward growth there in the tax revenue. And what you have here on the line running through the middle of it is the cost of SARS. So you can see there was a steady decrease. So SARS is collecting more taxes with less resources. It's just as simple as that. And every year the tax increases by an average of 6%. Okay, so volumes processed for tax audits, and this is specifically tax audits. So SARS processed 17.2 million tax returns during the tax year and instituted 1.6 million tax audits. So that gives you a 9.3% tax audit rate. So of the tax population, of the 20 to 26 odd million taxpayers, 10% of taxpayers are being subjected to tax audits. It's a significant amount of taxpayers. Most of them, of course, are verification types. So i.e. SARS say, send me a copy of your Discovery Medical Aid Certificate or a copy of your travel log, which is of really no consequence. So the majority of these audits are mere verifications, but a lot of these, and we'll get to the numbers just now, are in fact in-depth audits. So here's a large graph, and I'm not going to go through all of them in one go. So you have the notes available to you, so please go through it. The important one is this column here in the middle, the audit coverage, where SARS says they achieved 14% audit coverage rate versus a target of 12%. So what that effectively said is, in the beginning of the year, SARS planned to audit 12% of the tax base, and in fact they went on to audit 14% of the tax base. And that, that again just points to the attitude of SARS of collecting more taxes from the current tax base and the amount of pressure that they're putting under. So on your column on the right-hand side is the amount of criminal investigations. So they handed 411 cases over to the National Prosecutor Authority for criminal investigations. The NPA prosecuted 88 of those and finalized 88 of those and found guilty of 95%. So you can see there's not a lot of tax evasion on the go, considering that they've audited around 2 million of the taxpayers. If you're going to prosecute and finalize 88 cases of all taxpayers, not a lot of people are being found guilty of tax evasion or any type of tax fraud. But that's the stuff you'll see in the newspapers. That's really the tip of the iceberg, are the people that's been criminally found wanting of SARS, and they end up in the newspaper. But really, our client base, me and you and your clients and the people here today, are not in that segment. We are the iceberg underneath that, the 26 odd million honest taxpayers that really don't want any trouble from the revenue service. So SARS goes on to say they targeted 6,000 small to medium enterprises to audit. They in fact audit 11,000. And this is what they call investigative audit cases. And this is a new thing we saw in the SARS report. We're not able to pinpoint what the difference is. In the last year, SARS reported that they audited 48,000 small to medium enterprises, and this year 11,000 small to medium enterprises. So that's a significant drop, but it's not an actual drop, because they've changed the definition of what they call now an investigative audit versus a normal audit, and they haven't commented on what the differences are. So our interpretation of this difference is that 11,000 people had a really serious audit. And the difference between the 11,000 and 48,000 from last year is just the depth of the audit that SARS is going into. They also reported last year that they collected an additional 40 billion rands worth of tax audits from the small to medium enterprises, and this year they reported that they've collected an additional 8.3 billion, as you can see on the slide. So there's a disjointment between last year and this year, and it's because the reporting standards has changed. And they also then focus on large businesses, but you can see it's only 300 large businesses, or they targeted 300, audited 600 large businesses. So the large businesses, although they make up a significant amount of tax for the fiscus, there's not a lot of them around. It's really the small to medium enterprise that's in the middle of the target of SARS, and the shareholders that sits around those small to medium businesses. Okay, so that's enough about the statistical environment. We look forward to what SARS is planning for the year to come. So this comes out of the SARS plans for 2019, and this is a quote from there: given the recent downward adjustment of 50 billion rand in revenue in recent medium-term budget, with a large part of it attributable to the retreating GDP growth, the risk to SARS for the remainder of the year remains lower tax collections. A further decline in consumer confidence, together with a declining business confidence index, will have a direct bearing on the tax revenues. Furthermore, moderate domestic growth projections based on macroeconomic policy and political uncertainty will continue to pose a risk to SARS. So clearly from this, sort of very boring paragraph, SARS is worried about the tax collections. Because of the slowdown in the economy, because of a lack of consumer confidence, and there is this real thing called the where people, the tax, what do you call it, the tax revolution, the tax where they withhold their proper taxes, and e-tolling would be one of those sparkling examples where the tax revolt starts kicking into play. And there's a little bit on the go. It's been in the media. People are worried about and they're talking down the tax revolt, but we are seeing, and SARS is seeing some developments in that situation. So this comes out of the further down in the SARS plan. So I'm not going to go through this whole slide because it's fairly monotonous. But on the right-hand side, to address these risks, is continuing to implement a comprehensive segmentation strategy to improve service and manage compliance of the different taxpayers and trader segments, and include individuals, large businesses, small, medium, and micro enterprises, high net worth individuals, trust, and tax practitioners. So this is where SARS is targeting. They put it in their business plan. So this is not a surprise. This shouldn't be a surprise to anybody unless you haven't read the business plan. I don't know about many people aside from myself that actually reads the SARS business plan. But they are quite clear that they are going to be targeting large businesses, and the large businesses more for the international transactions for base erosion and profit shifting across borders. So we're not too concerned with that. But we are concerned with the small to medium-sized businesses. We are concerned with the high net worth individuals that sits around those businesses. We are concerned with the trusts, because many of you are involved in trust and use them for the proper purposes of protecting their assets for future generations. And this is a new one. They're going to be focusing on tax practitioners. We haven't seen this one before. We don't know why it's there, but they've put it into the plan. plans. So something to think about. Right. So some more of the planning. So they are planning to audit 300 large businesses. So this bottom one here that's got the 1,000 on it. So they plan 1,000 targeted interventions for SMMEs, and this again is a new introduction by SARS. They're not going to audit only 1,000 businesses. It doesn't make any sense because they just came up 48,000 audits to 11,000 in-depth audits. So they're not going to decrease to 1,000, and I can guarantee, or 1,000 audits. I can guarantee you that. What we suspect this is SARS has there's 1,000 items SARS will be looking at when auditing businesses, which is a significant amount of matters to look at. But it does start stacking up when you break this down into income tax, VAT, pay-as-you-earn, capital gains, customs and excise, etc. All those classes of taxes and the amount of things that's on the go there. So we suspect that SARS is segmenting the tax database and has a 1,000-point approach to that, 1,000 targeted interventions, whatever might be classified as that intervention. And at the right here, you see, again, they're targeting 95% criminal prosecution. They're also, by the way, becoming very serious about criminal prosecution, so we anticipate that those things will go up. So they are becoming less lenient, and the tax practitioners would have seen this in the media for late submissions. So they said if there's any late submission of a VAT return, say, they will issue one warning, and then after that, they will submit for criminal prosecution. We haven't seen that happen yet, but they've been threatening of it, so don't be surprised when that starts happening. Right, in summary, the macro environment is the following. So we see the revenue collection gap is large. So we've seen, and it's common knowledge, that there's a 15 billion rand gap that the South African Revenue Service needs to fill. So that was last year's gap. This year is still too new to understand what the gap is. But we suspect there's going to be a gap because, frankly, the amount of taxes that they need to collect has gone up. It hasn't gone down. So they haven't compensated for the fact that they under-collected by 50 billion. The target has been increased by the normal 6%. So SARS plans to collect more taxes. We also expect the economic growth to be less than 1% versus the SARS revenue growth around 6%. So you can see there's going to be this disjointment between the economy growing, i.e. more taxes being available by organic means, and the increase in the top line of the South African Revenue Service. And you don't need to be a rocket scientist what that means for the average taxpayer out there. So SARS is collecting more taxes with less resources. Existing resources is under strain. And we have seen this in our business, and you as a tax practitioner out there has probably also seen that there's less and less skills in SARS. So what we see out of SARS sometimes is nonsensical, doesn't stack up, and we're not getting proper reasons when we request for reasons, etc., etc. And we increasingly have to resort to legal means to solve legitimate tax objections and disputes and so on. And also the people that's in there is under pressure because the resources hasn't been increased in SARS, yet the target has gone up. So we see a lot of shortcuts being taken, and we'll talk about one of the shortcuts that is very frequently seen, and it's now currently being seen as almost acceptable. But when you understand your rights as a taxpayer, you start understanding that SARS is just abusing your rights. And we suspect SARS has no option because they're under significant amount of pressure with lacking resources, and therefore shortcuts are currently the name of the game. Lack of feedback, lack of responses. When you get the responses, they are not to the standard that it needs to be, and it needs. And you as the tax accountant scratching your heads. So hopefully we can do something about that. So SARS aims to increase audit activities and is targeting individuals, small to medium enterprises, transnational, high net worth individuals, and base erosion profit shifting, i.e. large organizations. So that's pretty much a summary of what when we look into our crystal ball, what we see is going to be happening with SARS on a macroeconomic level. So that has some implications for the average taxpayer. So our view of the 2019-2020. So looking forward, this is what we think is going to happen. SARS is under pressure to perform. We've discussed that at length now this morning already. SARS auditing activities are set to increase. We cannot see that the auditing activities will decrease because, frankly, the targets are just high. There's pressure on the current SARS resources. SARS experienced a brain drain in the past years. We all know about that. That it's became a very politicized internal organization. That's why Tom Munyani is one of the reasons why it's no longer there. And they are trying to fix it, but there's still a long way to go, and the damage has been done. So the good people has left SARS in pursuit of better careers elsewhere. So we've seen that. We expect the quality of the audits to deteriorate, accompanied by an increase in irrational tax assessments. And we see that into our claims office fairly regularly, that we get assessments and we have no idea what's going on with that revised assessment. We don't know how they got to it, and neither does the accountant. So tax disputes are therefore also set to increase, and tax practitioners and their clients must be prepared for these eventualities. Now, this all seems like a bit of doom and gloom. And it's not my intention to preach doom and gloom today, but it is required that we have a sense of reality, what's going on currently with our beloved tax collector. Because it is important for us to understand why this is happening, how this is happening, and what we can do about it, I think is the bottom line of this morning's discussion. Okay, so we sit in an insurance business, and our job is to protect taxpayers against SARS tax audits and disputes, especially when those assessments are just irrational and we don't understand what was on the go. So I'm going to present to you a case study of a client that we had. It was the beginning of this year. Well, it started in October last year. She submitted a tax return, and then she attempted to get things fixed. So let me get into this case study, and for the accounting practices, I'm hoping that you see some familiarity in this, because you're not alone in this battle. There's a significant amount of people, as you've seen from the statistics, that this happens to. This is not an uncommon thing. And for us, this is a middle-of-the-road case. Some of our cases are much more simpler than this. Some of these cases end up in court. It becomes a lot more complex, where we have top attorneys defending our clients and so on. For us, this case study is sort of the middle of the road thing, and I'm hoping that you can. Most of you know what this is. This is a income tax notice of assessment. Most of you have seen one of these, and ideally what you want is a plus at the beginning of this. This is one of our clients. It's a small business employing around 6 people in the northern suburbs of Johannesburg. She submitted a tax return in October via a very reputable accounting firm, and she was expecting a refund. So she received this assessment from SARS, where she owed the South African Revenue Service almost 600,000 rand. So and she had no reason, so she had no idea why this was. So we corresponded closely with the accountant. The accountant submitted the objections, all the appeals as normally happen. The accountant had no idea how SARS arrived at this assessment. And SARS was just continually ignoring all the normal processes and all the normal remedies available to the accountant, which is not a strange thing. This happens often. So the problem with this, of course, is with the South African Revenue Service, it's pay now, argue later. So SARS wasn't interested in listening to reasons, and the accountant was getting seriously frustrated because he wasn't being listened to. If SARS collects this money, which they, for all intents and purposes, are able to do, they can attach these funds out of the bank account of the client. They have the legal rights to do that under certain circumstances. But if she pays the 600,000 rand, she will liquidate the business. 6 people will be out of a job, because this is not a big business. I mean, even for a larger business, 600,000 rand to pay to the South African Revenue Service when you were expecting a refund is a significant amount of money. So we requested the client to submit a claim, and after a lot of investigation work, etc., we appointed a bunch of tax attorneys, because we have exhausted by that time all the available accounting remedies that was at our disposals. All the objections were logged, all the appeals, all those processes were gone through within the required timelines, and just nothing happened. So to give you an idea, so SARS asked for did a verification audit, so asked for supporting documentations. It was 2 typical copies of invoices. There was some legal documentation she had to submit, some salary, proof of salary payments, etc., etc. So in all, it was too much information to upload via e-file, and she then agreed on the 25th of the month to email the South African Revenue Service all this documentation, scan and email. So that was on the 25th of the month. On the 26th of the month, she received this revised tax order. Clearly, SARS did not consider what was put in front of them. Just by nature of the fact that the taxpayer or the accountant did not know why they were owing this money to SARS makes it fundamentally wrong. You as the taxpayer have certain fundamental rights in terms of the Tax Administration Act, and larger than that, the Constitution. You have the right to information. You have the right to be informed what the situation is with this assessment. So typically we would expect SARS to do a verification, i.e., request for supporting documentation in support of your tax return. If they're unhappy with what they say, they come back and then they start instituting an audit, for which you would need to be notified in writing what they'll be looking at, who the audit is. So there's certain information in that audit letter. When they go through the audit process, you would need to, as the taxpayer, be updated. That's your right to information. At the end of the audit, if SARS has found something untoward, they are then required by law to issue a Section 42 letter of findings. The letter of findings says we have done X, Y, Z, and we have found A, B, C, and therefore you owe us X amount of money. That letter of findings needs to be on file, and you need to be given, as the taxpayer, 21 working days to respond to that letter of finding. Finding which any assessment is illogical. It is invalid. In February last year, we had a case that went to the tax court in PE, and we won this case where the tax court ruled that because a Section 42 letter of findings wasn't issued, the client's fundamental right to information was violated, and therefore the assessment is invalid, and therefore was negated. It was taken off the table. So, and this happens fairly often. I think the tax accountants here today will tell you that they have many assessments in their files without the preceding letter of findings. So in our client's case, in this case study, we then involved some very good tax lawyers from Port Elizabeth, strong registered attorneys. You'll see some more of them later on. And if some of you don't recognize this type of document, you'll be very fortunate, because this is a legal letter. And this is the legal letter after, as I said, much correspondence with SARS that they've written to SARS. And effectively, my apologies, I'm just going to read to you the last paragraph in this, or paragraph 2.4, to give you an idea of the seriousness of what our attorney is doing to SARS. You are hereby required to withdraw your additional assessment within 7 days hereof, and to properly consider the relevant material uploaded on the 25th of October. Should you fail to do so, we hold instruction to proceed with a judicial review of the additional assessment for failure to comply with Section 42. So there's two things on the go here. First of all, our taxpayer wasn't given a letter of findings, had no idea why she's being reassessed for 600,000 rand. And the second thing is, it was clear to us that SARS never considered the information that was put up there in front of them in the first instance. There was no way that you upload information on the 25th and the 26th the assessment came out, which is, so by the way, within the 30 days of what is required for the uploading information. So on 2 counts, we have found that SARS is not wanting, despite the fact that the accountant has gone through all these normal remedies to object, etc., with this case. Finally, it ended up with a legal proceeding. Let's just need to go over this quickly. And this, by the way, after our second legal letter, because we had this dead spot over December, January, where everything closed down, so we continued to proceed on that day in January. And then after the second legal letter, this comes out of SARS, which is the most unspectacular settlement that says outcome of objection. The South African Revenue Service has considered your notice of objection dated 2018-10-29. Your objection against the 2018 tax return has been allowed. That's it. End of the story. There was no reasons given. We still don't understand to this day what happened to why there was such a large tax audit. And in fact, this following slide came back from the South African Revenue Service, and it did this. So you'll see that she is now owed 604,000 rand by the South African Revenue Service, which, so by the way, was what she was expecting in a refund. She was expecting, when she submitted the tax return in October, that this will happen to her, that she will get a refund. Instead, she got an assessment where she owed SARS just under 600,000 rand. And this, as I said, despite all the normal procedures, there was no outcome to this. Okay, so I'm going to take a short break because I have a video clip for you guys to see. Before we get to the video clip, Shane, you can start getting that ready if you don't mind. So this is a email I got back from a client. So the name has been backed up. So for those of you who don't speak Afrikaans, she says, "Hello, Willem. She says she gives me permission that I can use the case, and she says she's just too happy that the nightmare is over." And that's fundamentally what we try to achieve for our taxpayers. Where you're an honest taxpayer, getting the best advice from your tax accountant that you possibly could get, and you still fall foul and you're not able to get a result of the South African Revenue Service. This is when we start paying for accountants and tax attorneys to deal with the matter so we can protect the taxpayers' rights. Shane, are you around? Last year for a bunch of accountants down in Cape Town, and this is the tax attorney that I've referred to in the case study that we edited some highlights out of his presentation to the tax attorneys. And I just want you to have a feeling about the technicalities that these guys get involved in when we protect our taxpayers' rights, and that might give you some insights about what the sort of stuff that we do. Thanks, Shane. You can eat it. That little video just to give you an idea of the caliber of stuff that we do. We do use it in some of our sales presentations, so you can see it has a strong sort of sales angle to it. So I apologize for that. It wasn't the purpose. It's not the purpose of this meeting. The purpose of this morning's seminar is to give you more information. But anyway, I'm hoping that it'll give you some idea of what's on the go and how we go about our things. So often we bring the tax attorney together with the tax accountant, especially in those very difficult to handle situations. And by doing that, we protect our taxpayers' rights, because the taxpayer has rights. But for you to affect those rights, for you to benefit from those rights, you have to affect those rights. You have to understand what the procedures are, and you have to have the skills in your corner for when things do go south. So this is effectively what tax risk insurance does. It's in the event of a SARS tax audit, or if a disputes arise between SARS and the taxpayer, then tax risk insurance will appoint and pay for the team of tax professionals to deal with the matter. And that includes the cost of the tax accountant. And so more often than not, we're able to resolve the dispute with SARS with only the help of the tax accountant. But sometimes if it's run up to a brick wall, we need to go and remind SARS of the law, especially when there's a lack of skill on the inside of SARS. And sometimes if they don't listen, we need to drag them off to court so that the judge can remind them of the obligations and the rights of taxpayers. We don't like to go to court. We like to stay out of court because it's not in our best interest. It's also not in the taxpayers don't want to go to court. It's a complete waste of time, money, and effort, and it's very, very stressful indeed. What we want and what the taxpayer wants is exactly the same thing. We want to get out of an audit and a dispute as quickly and as cleanly as possible to settle the matter. We got better things to do in our lives, i.e. run our businesses and make more money. So we ensure a fair audit and the dispute outcome and giving taxpayers complete peace of mind. So I think I'm going to now hand you over to Melanie. Melanie Leroux is the Managing Director of Great South Financial Services. She's the one that's able to provide insurance advice, etc., etc. And she's just going to give you some broad notes on if you want to engage in what we do, how to access us, etc., etc. So Melanie, over to you.
Thank you, Willem. Good morning. Just as a quick introduction, Great South Financial Services is an authorized FSB. So in essence, we actually have a brokerage license which allows us to give advice to yourself as a business owner, or if you are an accountant and a tax practitioner, to assist you or to help facilitate providing the information and advice to your clients, whether they're individual taxpayers or businesses. I just want to change. Okay, so obviously, because you are connected to the BAN webinar today, the easiest way to actually get access to the product is going to the URL that I put on the screen here. BAN actually has the portal directly on their website, which allows you very quickly to go online to get a quote. So as Willem has mentioned, the product covers both individual taxpayers as well as businesses on a various sliding scale. What we will do later this week, we will send a thank you to all of you that participated and provide you with the relevant information that you can see more information on the product and how it works and how easy it is to get access. So if you go onto the portal, you'll be able to quickly go, fill it in, get the quote, submit, and literally within 6 minutes you are covered by the product. For those of you who like to do things the old-fashioned way, we do have paper applications, which I will attach to the thank you a note later this week, and you would just send it to this email address, and then we will facilitate with Willem's company tax risk underwriting managers to make sure the cover is activated. Also, our role is also to assist you with any questions you might ask. So you're most welcome to contact me on this email address, and I will call you to discuss any questions you might have on the product, or give you some advice if you are an accounting practice how to market this to your clients. Okay, I'm going to hand it back over to Willem now.
Thank you, Melanie. So as they say in the movies, that's the word from our sponsor. So thank you for that, Melanie. I'm going to take the last 5 minutes of our session because we're about to run out of time, just to tell you a little bit about the terms and conditions, okay, make you aware of how the cover works, makes your life a lot easier, and the best way to start is to tell you what's not covered. So effectively, you understand what the cover is under the insurance policy is. If you are selected for a tax audit, or if there's a dispute regarding an unfair assessment, we will appoint and pay for the team of tax professionals to deal with that tax audit and dispute. So the value proposition is fairly straightforward. If you get into trouble with SARS, we will appoint tax professionals to sort you out. So there are limits. So the limits works as follows. So there are some exclusions under the policies. So audits and disputes which have commenced prior to the inception of the policy, we don't cover. So if you take out the policy today and you're already in a dispute with SARS, that specific dispute will be excluded. You can't have a car accident and then buy insurance. Insurance, unfortunately, doesn't work that way. But what it does do is if you take out the policy today and SARS comes at you next month for a tax return from last year, 2 years, or 5 years, or 10 years ago, it doesn't really matter. We will cover that also. We will still cover that. So the cover is retrospective as long as you're not already in a SARS tax audit dispute or have reason to believe you'll get into a tax audit or dispute at the date of the start of the policy. So all matters are excluded. Matters where fraud and crime is involved, so that's typically tax evasion, but as you've seen from the statistics, it's really not a problem in my business. There's not a lot of people making themselves guilty for tax evasion. Those that do get in the newspaper. The rest of our honest guys, we just don't get into the newspapers. Audits as a result of a late submission of tax returns without an extension, so that's very straightforward. We encourage our clients to remain tax compliant. So to have an insurance policy doesn't mean you can now relax and not pay your taxes. That's exactly what we won't be covering. We're covering the honest taxpayer who's doing their best to do their bit for society. It's a constructive cover that we have, and despite the fact that you've done that, now you're into trouble with SARS. That's when you get some real value out of what we do. The cost related to the preparation of the normal tax return and supply of routine supporting documentations. So you are still required to submit your normal tax returns. You are still required to, if SARS calls for a copy of your discovery medical aid certificate or trial balance or something, you're still required to supply that. That's not insurance cover. So again, as I said before, we encourage our clients to continue to comply with the tax laws. If you don't comply with the tax laws, the policy will not operate. And then also, so the following two is very important. It's specific exclusions under the policy. Matters related to income generated outside of South Africa and matters related to customs and excise and exchange control regulations is excluded. So anything to do with cross-border transactions, be it import, export, or if you provide services or goods to companies offshore and you get paid by an offshore company, that leg of the transaction is excluded. We will still cover you for your normal pay as you earn for the local business that you operate here. So if you're importing factory equipment from Dubai, and so that portion will be excluded, but now you're manufacturing stuff in South Africa and selling it as normal, local taxes only covered under that policy. So that's that point. And then we know proper accounting records were kept. This is also not a major thing, as you all have proper accountants that make sure you guys submit your invoices and submit your records as you need to be. So this is more for the businesses that don't employ proper accountants, which there are few and far apart these days, I must tell you. And then also we don't pay for any of the taxes, the back taxes, the penalties and interest. So if at the end of the audit, if you have underpaid your taxes, and 99% of those cases because of a human error, you will still be responsible to pay your back taxes, you will still be responsible to pay the penalties and the interest on that. But we will do two things. One is we will make sure those are actual fair, that you've been treated fairly by SARS, that you were informed through the whole process, and that you understand exactly why you need to pay these taxes. And the second thing is we will also then engage with the negotiation with SARS to get maybe the penalties waived, the interest waived, etc., which we are often successful, especially if it's a first-time offence, if it was an honest mistake, etc., etc. So we make sure that the whole process works. But we are not insuring back taxes. The reason, again, as I said before, we encourage you to pay your taxes correctly and as you should. We're not giving our policyholders any incentive to underpay their taxes because it's an insurance policy that will back up the difference. We're not doing that. We encourage the taxpayers to do their thing correctly. And so here's some rating tables here. So this is if you want to know what it costs. It works in rate bands. So for companies, there's the rate bands, there's the premiums. You can read it yourself. For individuals, so there's a specific point here is that each taxpayer gets their own policy. So if you have a group of companies, a holding company, operating company, maybe there's a trust, there's one or two shareholders, and all those taxpayers want to have cover, each taxpayer buys their own business. If you do have a group of companies with, say, 10 or 20, taxpayers in a group of companies, speak to Melanie and we'll do a group scheme for you for all those companies just to make the administrative burden of taking out 20 policies lesser. But the principle remains, each taxpayer must be covered in their own right. So the next table here is the limits of cover. So you, again, the same sort of turnover band. So if you're a company, say, with a 14 million rand turnover band, you'll have 750,000 rands worth of cover, or 200 hours, whichever is the lesser, limited to 100 hours for any one claim. So a little bit of explanation there. We have these two ceiling limits, either 750,000 or 200 in this example, whichever is the lesser. And the reason for that is not all tax accountants and tax attorneys charge the same rate per hour. So if you have the middle of the Sandton City tax attorney that comes at you at 7,500 rand an hour, you will probably hit the rand limit first. But if you are using the local tax accountant in Pofadder, you'll probably hit the hours limit first. So 750,000 rand per hour or 200 hours in this example, limited to 100 hours per any one claim, which means as long as any one claim in a year is not more than 100 hours, you can have more than one claim. So SARS can come at you for an income tax audit and then later come back for a VAT audit and later come back and pay as you earn audit. As long as any one of those is not more than 100 hours, collectively, it's not more than that rand amount or the policy. There's an excess under the policy, 10% of the claim, minimum 1,500 rand. So here's the team as conclusion. I've got 2 minutes left. So my ugly mug is in the middle top because you don't know what I look like. So that's me. To the left is the guy named Peter de Schmidt. He's one of the top insurance experts in South Africa. He's also the chairman of our board. On the very right-hand side is a guy by the name of Clive Noland. He's a career accountant. He's the chairman of Noland's Accountants and Auditors, one of the top 10 accounting firms. That gives us our accounting skills. Bottom left is a guy by the name of Willem Smith. This insurance policy is underwritten by Hollard, and he's therefore Hollard's representative on our board. Guy in the middle is Dr. Daniel Erasmus. He's one of the top tax attorneys in South Africa. He gets involved in the really, really big cases, and he is also very much involved in trans-border cases, although the policy doesn't cover that, but in his private capacity as a practicing tax attorney, that's his bread and butter. In bottom right-hand corner is our resident academic, Professor Walter Geach. He's the head of the accounting department at the University of the Western Cape. If you're an accountant student or accountant, you probably did some work out of his textbook before. It's one of the best known accountants in South Africa and probably a top guy for trusts if you ever need some information there. So there's our contact details. Melanie for sales and service and advice. And if you need any sort of technical, what's happening in this case, in that case, you're more than welcome to speak to me. But I'm sure that Melanie will be your point person for if you want to get yourself covered under this cover. And that's it for me. And I'm on it's 1 minute to 10, so I think I filled my hour fairly good. Am I okay? The client received the refund in their bank account. In the case study shown, was an attempt made to claim wasted legal costs. How long after the new assessment the client received the refund into their bank account? So we had a problem with this in particular case to actually get that refund into the client's bank account, because once they acknowledge that they do owe us the money, sometimes, on occasion, and this one unfortunately was, there's a delay in processing the refund. And then you got to go after them for processing the actual refund. So this unfortunately happened, but generally speaking, it's fairly instantaneous. Once they decided that they're in the wrong and they're going to be paying the refund, it happens within a day, 2 days. We start getting nervous if it doesn't arrive in the bank account after 2 weeks. Then we start writing letters to the SARS again for this refund. The next question was, in the case study just shown, was an attempt made to claim wasted legal costs? So I wish. So it would be good money after bad. If it was, fortunately, we didn't incur significant legal costs. We probably had the accountant on for about 5 hours for this case, and the tax lawyer about for 5 hours, and it would cost us more to sue SARS to get the money back. What will happen if the case does go to court and you win the case? Most often the court then awards with costs, which means that we will get our costs back, not 100% because they award on a party-for-party basis, but we will get some of our costs back. So although we don't like to go to court, we don't mind, because if it does go to court, we have a great chance of getting our money back. But that's what insurance is for. So both the taxpayer and the accountant is not affected by that. You know, that cost of getting SARS to comply is the insurance policy's cost, and therefore any refunds we might get goes back into the insurance pot as part of the insurance cost. So it doesn't affect the policyholder or the accountant at all. It affects our business, and therefore we have that right to recover losses, as is an insurance right in general. The next question was regards to the assessment received to pay SARS and the principal pay now, argue later. When you raise a NOO, you can ask for suspension of payment. Is this correct? Yes, that is correct. So once we put the legal process in place, probably the first thing we do to stop the clock, i.e. penalties and interest, is do a suspension of payment. If they've already zapped some money from their account, we will then ask them to get the money back, because once the process is in place, there's provision under the Tax Administration Act that the clock stops running, so we'll put in the suspension of payment. Absolutely, we'll do that. I have a question that came in the last minute. Can a taxpayer, company, or individual choose the annual rand limit and pay the relevant premium rather than having to be locked in turnover or taxable income only? The reason I ask is that cost to represent taxpayer with regards to a tax dispute with SARS remains the same irrespective of the turnover of the taxable income. So the question is if I'm a small company, can I buy more cover? Absolutely, you can. So we have a lot of clients, especially when they sort of at the high risk level, i.e. a trust, for example, with low turnover, prefer to buy up cover. So we encourage you to do that if you suspect that, listen, the cover that's provided at my turnover level is too little for the potential problems I have. 100%, there's no problem with it. You just can't buy down cover. So if you're a 100 million rand company and you're paying a premium for a 3 million rand company, we'll probably adjust the amount of claim you pay out. So you can buy up cover, you just can't pay down. So absolutely, you can do that. I contributed something to your knowledge, and have a good day.